On the 26th of September. How's everyone out there today? This is Chris Pulver here. This day has flown by. I feel like I just finished my morning sessions, and all of a sudden it's 3 o'clock, and we're talking for the final hour. So, what a day, I suppose. Let's take a look and see how things are rolling in. Um, Interesting developments when it came to price action today. Was very happy with a couple of trades. Had a long SPY trade close out for profit this morning. Had a long SPY put that closed out for profit this morning. So that was taken yesterday, closed today, taken yesterday, closed today. So 2 winners on SPY, had 2 winners on SPX. I also had a chart alarm go off. I've got my China stocks doing really, really well, and I'm trying to stay out of the way. I'm trying to look at how to get back into some of them. So I do have a trade that I want to post if I've got everybody in my alert section with Discord and my alert section for A1 trading. I'm going to look at the stocks options trades, and I'm putting in a couple of extra trades in BABA. Let me do this right here. Oh, Benji says hi. So I did a couple of trades in Alibaba. It is right here, BABA. I just added this in. This is I'm typing this in the Discord as I go. So 9/19/25 expiration. I did a sell 75 put, sell 70 put, and sell 65 put. Collected $5.90 credit. I am willing to own BABA near the recent lows. But if BABA continues to rally aggressively higher, this becomes a nice income trade. So I'll look for 50% profit or better on the total credit. So that would be roughly a 2.95 debit or lower. All right, so that is right here. Going into BABA. The daily chart is just taking an absolute monster move. And the reason I'm not just jumping and buying this is because I already have shares of BABA. I already have shares of BIDU. I'm trying to let those run and stay out of the way. My BABA shares right now, I'm long. I don't have anything covered. And on BIDU, I have them covered at 115 and 130. And so I'm just going to try to let, the China stocks, if it keeps pumping, then I'm going to let them run another whatever they want. I mean, I looked at these levels. Let me get rid of these moving averages here. Just makes it a little bit noisier. So I'm looking at this level here as my potential profit zone. So if we come back to this high or this high, we also have this huge gap up here. So I would say if we get to 120, I like this price for at least a target 1. We get up to 150, 160. I love that for a target 2. And measuring this, if this is let's say all this is wave 1, all of this was a wave 2. So this is 1, this is 2, and we're starting wave 3. Buckle up, because this trend could be the real deal. So if I just drag a fib from low to high, we could hit this 132 to 138 zone. We finish this move to fill the gap around 160. There's still a lot of upside potential here. I like to typically take not just fibs, but also measure symmetry. So there's my low to high swing, and looking to see if this symmetry gets hit. So a couple of spots. This is around 130. I'll mark this on my chart. And if we come back and retest maybe a past resistance to support, I'll mark this out. So this is a couple of levels. All right, so I'm going to say this is swing symmetry over here. Actually, you know what? I think we can label these. Let me get rid of this box. I think we can label these now. Yep, so swing symmetry. Awesome. And then a 618. So gap fill plus 618 extension. And this final one would be like a wave 5 or a final symmetry target. Let's go here. Potential wave 5. Okay, so that way I can get rid of the box. Just plot along, and you know, if price moves without having this just crazy exponential move, then great. But if we see a trend established and a channel right here, perhaps the market rips up and then pulls back. A bull flag, I said this week actually, a bull flag with these China stocks would be pretty fantastic because it would show that the bulls are eager to push price much, much higher, and bull flags are typically very aggressive and very fast with continuations. So if we see the market, big rip and a gap and a gap, obviously the market's going to pause at some point. I would imagine, but we are quickly playing catch up, and it looks like this rotation into China all over again. Just take a look here. The Hang Seng is up 4.16%. Alibaba's up 10.44%. Baidu up 9%. FXI up 8%. KWeb up 11.92%. Today feels pretty good because I have been kind of talking crazy to myself for the last year where I'm like, this is my exposure in China. I have Alibaba and Baidu and FXI and KWeb. And it looks like it's finally starting to show some signs of, okay, you weren't terribly crazy. There were some good levels to get in on. And so right now those trades are running. So if I look at Alibaba right now, it is sitting up around $2,000. Actually, this is everyone's account. So Alibaba's up around $11,700. Baidu is up around $4,000. FXI is up around $5,000, and KWeb is up $1,100. And I want to get obviously some more activity in there. I'm just not chasing the highs. I do have a couple of interesting stats to share with everybody today. So if you're out there typing on, wire yes, if you're watching, cheering along, it's YouTube, it's Twitter, it's Facebook, live on YouTube now. Let me go to channel. Okay. And I took a couple of screenshots that I wanted to share. Let me just post this. Let's go to my Slack, and I'm posting this to myself. Here we go. Add a screenshot there and there. All right, let those post. Okay, if those popped up, then I will drag these over. Okay, can everybody see this? Oops, that's not what I wanted. Oh boy. All right, I'll try to do my best to keep the zoom in so we can see it. So average cumulative S&P 500 returns January 1988 to present. So we're talking just shy of 40 years in the S&P. That if you invest on any day, invest on any day, typically 1 year out, you're getting about 11.7% return on capital any day. If you invest at all-time highs, you're getting 14.6% over that same year. Again, averaged since 1988 to now. Over a 3-year period, that invest on any day is up 39.1%. The invest at all-time highs is at 50.4%. That's a crazy difference of outpacing, right? An average 11%. That's a lot of alpha there. Well, not alpha because the benchmark, technically S&P is the benchmark, so that's your beta. But still, that's just timing, I suppose, or confirmation of momentum. I mean, call it whatever you want. If you're investing all-time highs, it feels like crap, but it's proven here for almost 40 years that it's a pretty good time to just get in because it just kind of, I mean, I guess it just echoes all the confidence and the momentum that the market gives us. And you could argue that, momentum begets momentum, and this market just tries to grind higher. So anyway, and then you go out 5 years, 5 years, 71.4 to 78.9, investing on any day versus investing at all-time highs. So pretty impressive stuff. Obviously, it's a long-term horizon from 1 year to 3 years to 5 years. There's another interesting stat. If you take the S&P 500 over any 20-year period, it could be at the absolute top of 1929, the absolute top of 1987, the absolute top of 2000, the absolute top of 2008, the absolute top of 2020. Any given time, if you can stretch out 10 years of investments and have a horizon of 10 plus years, there's like a 90+% chance you're going to make money. 20 years, it's 100% for 90 plus years in the stock market. So for the long-term investor, there's not a lot that's going to be taking away, gains. This I thought was another interesting chart to dissect. So, you buy the all-time high, you have a 35% drawdown in 24 days. So obviously a bear market happens quickly. This is 2020. And, is it a double top question mark? Nope. It blows through the highs and we extend from a run 42% above the highs, not just from the lows, right? The lows, obviously, you time it, but we're talking about if you buy the all-time high, you're still getting 42% return on capital. Okay. And then it pulls right back and it pretty much wipes you out. But if you look at the all-time high, is it a double top? No, it is not. We're up 60+% in the last 24 months. So the market just does amazing things. And I don't think it's our job to, pick bottoms, pick tops. Obviously, sometimes we get lucky. Sometimes it makes us look really smart. Other times we look really stupid. But the reality is the market's going to do what it wants to do. And so all I can emphasize is, do you know what you're doing to protect your capital? Because it's not that hard to make money in a bull market. And right now, the US market has been in a bull market since late 2022 to now, and it still is, and it's still ripping higher, and it's trying to. And we might have a little shakiness here and there. We might have some volatility going into the election. But if nothing is massively disrupted, this market's going to try to find a way to grind higher. But what I think is interesting is the US right now having all of this success and all these runs and all this momentum, the US is starting to look a little stretched, where I'm not, and this is not calling the top. I'm just saying that this is a slow, right? If the market is slow to go higher and you're looking at something like China or non-US that's going gangbusters, maybe this is a whole new phase. Let me check here. I mentioned this earlier this week. If I go to M2 money supply, let me see if I can build a chart out here. If I go United States money supply, it is on the uptick since this year. Okay, I'm actually going to do this. Let me go to a line. I'll go M2 money supply, money supply. So there's US. Let me go to, let's go M2. M2, or I can just, I think I saved this yesterday. Global money supply. There you go. So here's major central bank M2 money supply. We are up to fresh all-time highs. So this includes, and I want to actually check this there's other charts here. So we're sitting here at all-time high where there's more liquidity coming into the markets. Let me zoom in and see if I can enlarge this. So this technically started off around July 2024, M2 money supply going higher. Now it has a place to go with momentum in the markets. You're starting to see the reflection of that money supply getting into the markets. Momentum's taking it higher. China's come back in a big way. We still have about 45 minutes before the close today. You look and see where things are at. Let's take a look at the heat map and go world, close. Look at this. China, all green in a big way. Right here. All green. Okay. Japan, all green. Taiwan, all green. Huge, right? So, I mean, look at your big gainers. Baba's up 10.5%, PDD 1504. You got some EV plays in there with the electric vehicle space. JD, that's another one I added some trades on this week. Let me see how that one's doing today. That's up 14.57%. Good Lord. I bought it at 32.50. I mean, my gosh, man, that's another one I didn't even look at this morning. JD is up $10,500. Okay. So good timing on the shares. Not JetBlue, JD. There it is. Yeah, up about $10,500. All I did was bought a little tranche at $1,500. I bought it around $30. Nothing crazy, $32.50, and it's up to $37.95. Pretty good timing. I've got a bunch of 27 puts, 25 puts, 23 puts, 20 puts, 17.50 puts, $15 puts. This is all cash secured puts that will be generating some profit, hopefully, very soon. I've got year-to-date P&L. Let me see if I can go over here. So I want to see unrealized. So if I go to JD, I've got P&L year to date is 10,500. I've got realized, or I'm sorry, unrealized P&L open is 2,700 bucks right now. That's just running on really the own shares and more decay on the puts that I have. So I mean, the stock is just cranking again. The alert was posted. I think I took this trade live in a session like this. It was either final hour or my time that I spent with A1 Trading, but I bought the shares. I also added in the 27, 25, and 23 sell puts, $5.25 credit. That should allow me to also generate some nice income right there. So there's my 27, 25, and 23. They're already up some profit, and the shares are up 250 bucks. So anyway, it's adding up nicely, and I am just trying to stay out of the way. I'm not that eager to jump in and start protecting profit. I hope this is just a bit of a start to kind of kick the market into overdrive. I get it that it might feel like, oh my gosh, all-time highs. How can it possibly go higher? But it can, and it might. And with China finally stepping up and coming to the table, I certainly hope that it does. And so maybe this extra growth and this extra fuel is not just pumping back into the US. It could give the US some confidence, but perhaps there's a rotation a little bit from non-US where you're starting to see a lot more gains outside of the US. And so I just go to, I mean, look at our index today. Index is here. S&P is up 0.4%. NASDAQ's up 0.8% with a big gap to the upside. We gapped way up on the Qs today. Dow up 0.5 and Russell up 0.87. Pretty lackluster. And then you look at the Hang Seng up 10.3. Look at the Nikkei today. Nikkei, where you at? Hang Seng up 3.26. Oh yeah, Hang Seng up 4.16. Where's my Nikkei? Nikkei is up 2.79% today. Japanese yen is slightly stronger on the Japanese yen futures. Not by much though. Overnight currency strength chart. So you have some good risk appetite hitting the markets today. This is the Aussie and the New Zealand at the top. You've got the dollar, the yen, and the CAD at the bottom. There's an interesting headline this week, or today actually, that said Saudi Arabia is looking to say bye-bye to a $100 price on oil and looking to take back more market share. And in order to do that, that might be a bit of a red flag on oil to be heading lower. Just in the last 24 to 48 hours, oil has dropped around 6%. And I don't know what that looks like. I mean, I know that the U.S. can make oil and make it profitable around $37 to $45 a barrel. I'm sure Saudi Arabia is somewhere in that camp as well, but not everybody can. So I don't know if this is a bold plan to drive prices lower and we break this support, because if we do, there could be a lot of potential to the downside. And it's going to cause some pain out there. This might help bring down inflation, but I don't know if this is just complete manipulation. I don't know if I don't know. It's going to be interesting. Like, I do have some exposure in oil. It's not a ton, but I do have a 65 by 55. Right now, I'm showing that I'm negative on the P&L from the price dropping the way that it is. I am hedged. If we drop really aggressively, I'm hedged with two longs at 55. That's up about $290, but I need to see if that can actually outpace potential put. And I can roll the put as well. It's a futures play, but I'm looking at this expiration out to November. So I do want to watch that very carefully on my oil plays. That's really it, is just the 65 by 55s. So I have a nice little hedge trade, but I'm still upside down on the puts, and I could roll, and I could look to roll them out and hopefully down. But I certainly don't want to roll those for any debits. All right. NVIDIA pullback. Yeah, we'll take a look. I've been watching Micron all day as well. I have a trade on Micron. I need to see. This is an expiration for tomorrow. So I took an earnings play on Micron. We gapped up a ton. We had like a 2 standard deviation move on the earnings play. It went from $95 all the way up towards 114, 115. We're pulling back to 110. We had lows today around 107, 108. So my trade tomorrow, it needs to do this. In order for this to be profitable, I need to see if Micron will continue to drop into this yellow box. I need price to be less than 106 for my 650 credit to be profitable. If it's not, then I'm risking 350 and I'll take the loss, and it's a one loss earnings play, no big deal. But I would like to see price fade, and honestly, maybe I timed it wrong. Maybe I should have gone out to October 4th instead of tomorrow. And I don't know. Maybe I can look at a roll. Probably not, because it's out of the money at this point. So we'll see. We will see. But yeah, NVIDIA. So NVIDIA is we pulled up to around 127 and change today. High today is 127.67. We pulled back about $3. We had a gap fill. Take a look at the shorter time frame. Nvidia's price action, so up for the day to start out and then faded right back in. I still have a play on Nvidia out to October 4th. So I want to see if Nvidia will just have a pullback today and then still go higher, or what you can see on my chart is we have a high, and today could be resistance to then work its way back down. Now, where I don't want to see Nvidia over the next couple of weeks is right back in the freaking middle. I want to see Nvidia, at this high or at this low, and hopefully that happens by the October 4th expiration because that's the trade that I'm in. I did take profit today on the Qs. I closed them out at the gap high. I had a center price here around 471. We had highs today at 493. I took a profit. It was 11.50 debit, and I closed it out for $14 and change. So that was a nice little win there. I'm still in the SPY. I'm still in NVIDIA. So I'm continuing to watch and see how those trades go. But I'm out of the QQQ right now. I do have a couple of ES trades running. I'll show those right here. So my ES trade, I have one for tomorrow, 1, 2, 3. This one is, this one's going to be garbage, but let me see what this one looks like. Oops. So this one, 1, 2, 3, let's go analysis. So price is way up here. So I'm at a full loss on this one for right now. If it's trading for $5, I'm losing about $65 on the trade. It's not a big loss. That one's okay. I mean, as far as taking the loss, it's no big deal. That was an in the money put fly, broken put fly. And then if I do this next one for the 27th, this is a 1, 2, 1. And analyze this one. This one should look a little bit better. There it is. So real price is right here. And let me see. So I have the credit of 285. And what I'm looking for is if price stays right where it is, I will keep the 285 credit. Okay. I could look at it right now and see if there's enough decay to maybe take my, 25 to 50% take profit. So let me see what it's trading for right now. If I take this trade and look to close it, oh man, that's really close. I could get about 50% of the profit right now. The risk that I have in the trade is if price were to come back up, 1, 2, 3, if price were to come up into my profit trap by tomorrow's expiration, if price is past this, then I'm taking on risk. If price is in the middle by the end of the day, I might have about a 3x profit trap. If price just stays where it is or goes a little bit lower, then I'll keep my full 285. So what I could do right now is let me look at the multiplier here. If I keep it for $1.30, if I get out for $1.30, that gives me a $1.55 net profit. I'd make about $77.50 a contract. I'm going to try to hang on to this a little bit longer if I can. If price struggles to make all-time highs again tomorrow, which would kind of be nice, but we're still going into the end of the week. We're going into the end of the month on Monday. So I have no idea what price wants to do. I'm just looking to see if this is a chance to grab some profit. So am I happy with the trade right now if I get out of it? Maybe. I could also just kind of wait and see what happens for tomorrow, maybe close it out, give it more time to decay, go out to opening bell tomorrow. Maybe this is trading for like $1 or less. Okay. And I have another one right here out to the end of the quarter, which is Monday the 30th. And it looks very similar, right? So I've got a profit trap right there. I have a tail credit that's slightly bigger. I've got a profit trap, and then I have my risk. So I'm looking at about, 275 in credit here. This is $2.25 of risk. And then I have my profit trap that's up around $6. So I think I'm just going to see if price will just kind of oscillate in here, maybe move a little bit lower, a little bit higher. I will wait over that for Friday and Monday and see how those play out on, that's an ES play for the S&P for me. All right. I saw somebody asking, what are your thoughts on Costco earnings? Yeah, I talked about Costco earlier in the A1 session. So look, I've got a trade on Costco that I bumped out here. This is a credit spread. So I have a 965 sell put and a 970 buy put. It's a bear call spread. I've got it pending for $2.50. And this is a 10 for expiration. Now, based on what I see in my broker platform, the expected move is not going to hit 960 and change. So if I go to, let's go to October 4th, the upward applied move is about $44, and that would put us up around 945 to 950. Now, for me, if I get filled at 960 or 965, realistically, price is going to have to come all the way up towards 960 to 965 in order for me to get filled on the trade. Now, if that is the case, then I would get filled on a credit spread. And what I'm looking for is this area to be okay. We gap higher and we fade that gap. And if we fade that gap, then I can turn that 250 fill into 250 profit, and I would sit on that for a week. But if price is up a little bit and has some momentum, it still may not fill, and I might just cancel the trade. If we have an earnings miss on Costco that comes today after market, if Costco misses, then we drop pretty aggressively. This trade doesn't get filled. And what I have instead is I have a 111 that's all the way down here. I did like a 700 by 690 by 600 or something like that. Let me double check that. I have this one in my my alert service. Where's it at? So go to Costco. Oh yeah, I got to post. Hang on, I got to post this trade on Bobber really quickly. So there, and then I've got the 75 by 65. So that's a 75 sell put, $70 sell put, 65 sell put, collected $5.90 credit, 50 plus take profit, or 90% take profit. Okay, let me take a screenshot of that. I've got that trade pending. I've already taken the trade. I'm just posting it in my alert service. So copy that right here. There we go. Okay. I think I'm good. Yep. All right, that trade is in. And then let me find Costco. FXI, JD, Meta, Netflix, MicroStrategy, CMG, Costco. There it is. So my Costco trade is, I have a 700. What's it look like right here? Yeah, here's my trade. So I have a 700 by 655 by 600. I collected $5.45. And what I'm looking for is, if price drops, that's okay. Okay, I'm willing to let price drop all the way to 700 by 650 is way down here. And that's actually a bear trap. So if Costco were to drop all the way down here to this trend line, that is a $45 bear trap, which for one contract would translate to $4,500 of profit. Now, my put that I'm using to finance this trade is at $600. And the net position here, I'm getting $5.45 credit. And if this goes up in price, I might see this quickly decay, and I can take 545 and maybe close out for a 50% take profit, and I'll grab $2.70 and walk away, and I can redeploy it. Or I can go a little bit more like 90% take profit and try to get a majority of this without having the close to expiration. This is out to January of 2025, so it's not that far out to me to see the market just kind of remain stable. The one thing that would make this a little bit more disruptive is if Costco splits before the end of the year. It should even out the trades. Like, instead of doing a 700, it would split to a 70. Instead of the 655, it might give me like a 6.5 or 6.6, like a $65 or $66 long. I guess it'd be the buy put. So that's if we have a 10-for-1 split. And I'm just saying that because I wouldn't be surprised with this price going the way that it's been going, that we have like a 10-for-1 split. I think that there's members And everyday investors would probably not love to see Costco trade at $1, $2, $3,000. So if it pulls back or they split, pullback offers buying opportunities, split just offers a chance to buy it cheaper. And I mean, it doesn't change anything with the overall structure. I mean, it's just going to be they if you own shares, they're now you're getting 10 times the share, or you're getting the 10 for 1 split, but they're worth less because now the share price is different. But your actual like net asset value is the exact same. So I'm just wondering if it just offers more order flow opportunities for somebody to see like, hey, Costco's on sale at $70 now instead of, or I guess it'd be $90 if they just stay where they are. Okay. So anyway, that's Costco. So Francois, to answer your question, yes, there's earnings after market today. My trade, my trade is still here on Costco with the 655, or I'm sorry, the 965, 965 by 970. So that's a pending order. And I need price to really push higher on earnings, and then I'll fade that move. Otherwise, I'm just going to leave it alone. I mean, one trade within 30 minutes, it's like, this is not a bad way to look at it. You can go to a 0 DTE or 1 DTE. If I did this at the money and I thought, okay, is it possible that Costco gets higher in earnings? If I go sell and buy, I can get $1.30 to $1.40 on this trade and risk $1.15. So if earnings are positive by tomorrow and by end of day tomorrow, I can see price, give me a quick $140. If price is wrong, I'm risking $100. So let me see what this trade is if I do this. So that's $1.30. That's about a 1-to-1. We're expecting to see like a $30 move. I just don't know if this is going to be higher or lower, right? I mean, everything's been pretty much like popping up, but I have no idea. It's a crapshoot. If I get assigned, I'm not going to get assigned with a 1 DTE. So if I take the trade, get $1.35. Also, this bid ask is really, really wide. 65 cents by $1.30 by $1.95. If I get filled at $1.30, that's pretty great. But we might not see price cooperate the way that we want. Let me see something else here on Costco really quickly. Do I have any major levels that actually matter? It's pretty even. So I've got a bigger gamma level up here around 924. But it's pretty split between like the 895 and the 924. So I guess if I'm going to give a slight edge to the order flows, I would say that this is probably the likelihood that we get to like 920 or 925. But obviously, if that happens tomorrow, I want to make sure that if we push up to those levels, that we don't just immediately fade. So let me see here. I'm going to go with $1.40. I'm going to see if I can get filled in this trade. Let's do 2 contracts. And I'm going to go after a 50% take profit. So if I take this trade, let me see if I can get $1.35. Okay. Not filling at $1.35. $1.25 is the split because it's a 250 spread. I'm willing to go down to $1.30, but that is it. I'm not going lower than that. So if it doesn't fill at $1.30, I'm not taking the trade. Didn't fill at $1.30. Fudge. That's in the money too. That's a 905 by 902.50. That's in the money by, $2, $2.08. I'm not willing to take $1.25 only if I'm going $2.08 in the money. So I'm going to trade, and it's so far right now the bid and ask is too wide for me to get the fill that I want, so I'm not going to take the trade. But I still have my 111 and I still have my 965 by 970 pending bear call spread. So, but I don't see anything that's really standing out on the gamma levels. I would say that more than likely we do push up here towards 925 just at a glance. I'm trying to get filled on a credit spread, but if it goes the opposite way, like that could be problematic. I suppose what I could do is, let me see, what is like a 920 by 915 trade for? I can get $3 on that trade and sell that into tomorrow's expiration. If I can get it for $3, the expected move is 935 to 940. I don't know. I think I'm just playing with an illiquid bid and ask right now, so I'm just gonna leave it alone. I'll just watch it. Just let it be another earnings play. Okay, let's get into some currencies. Yep, I see Profit Pathways asking for dollar yen. Sure. So currency strength today, We see a lot of risk on trading out of China, especially. So those flows are benefiting the Aussie, New Zealand. I've got trades running. I'm up about $7,000 on my Swiss crosses right now. That's still one of my big campaign trades in Forex. The dollar, the yen, the CAD are super weak. The euro, the Swiss at baseline. The ECB, I'm sorry, the Swiss National Bank, the SNB did cut rates today. It was like early this morning. They cut rates to 1%. So I'm pretty happy to see that. It's still offering some positive swap. The RBA did not cut rates. They're still at 4.35. The RBNZ is still at 5.25. Let's check these rates out again. So the Bank of England held. So we have Australia at 4.35. Eurozone is cut to 3.65. The Bank of England is, where's my UK at? The heck? United Kingdom, where are you? Am I blind? I don't see the United Kingdom on here. What in the fudge? Well, they're sitting at 5% because they held. I'm surprised it's not on here. The U.S. cut rates by 50 basis points. New Zealand is sitting at 5.25 after a cut. Yeah, but the Swiss National Bank, is it reflected here? Yep, they cut rates today. What happened? I'm curious why the Bank of England UK is not on here. Strange. Anyway. That platform, it's a software that I use called Dynamic Trends. I have links and affiliate links and savings and promos and discounts if you're interested in my Discord. It's under the affiliate discounts channel, and that's the Dynamic Trends. So it's a software that I use every single day. It is a great way for me to get a good visual play and a visual roadmap of where I think prices are going. Today's a good example. I posted this in my Telegram channel. Do I have anybody that's, so if you're interested, I can post my Discord channel here. It's free Discord for those that want to follow. I've got a free Telegram as well. I shared this little, I just had some fun with it. Said, here's a fun trading story to share. It's 2 days old. Once upon a time on Wednesday, I placed a 574 long call on the SPY. It was $1 debit. I took that trade on Wednesday. Thursday morning, which was today, the magical market gapped up and made a high at 574.71. I need to put that 1 in there. 71. And good enough for a profit, 75 to 95% return on capital. Then the same magical market looked so good for a 570 long put. I bought the long put at 570 for 90 cents today, and it ran all the way down to $1.80 in profit. That was actually filled well before it hit my strike price that I wanted at 570. And so, rather than waiting, I had the expiration out to Monday. I talked about it to traders at a Friday and Monday expiration. We hit 100% of that take profit today within a couple of hours. And not a bad day for the low-hanging fruit bonus trade. And a lot of that is because of these gamma levels. So this is what I saw yesterday. Okay, so I took the SPY long call for $1.10 debit. And then today, the market gapped up to that level. And so I took the profit immediately and grabbed $1.75 to $1.98. That was my profit. And then today, I bought the 570 long put to go down, and I actually hit profit on this first little chunk to the downside. And then later on, we had another push, and it was trading for like 220 to 230. But pretty good stuff. So yeah, they help. They help a ton. They help a ton. Okay, so let me go dollar yen. Let's just go dollar index first. Okay, dollar index first. I mean, dollar index, and I've said this all week, and I will stand by this. I am really not that interested in trading currency pairs on the dollar. The Aussie dollar, the euro dollar, the pound dollar, the New Zealand dollar, the dollar CAD, the dollar yen. The only one I'm in is the dollar Swiss right now. And the reason I say that is because there's so much more to benefit from if the dollar is going to get weaker. The entire stock market, every other symbol over here is probably going to benefit from weaker dollar. So if we go lower, I'm not that interested in looking to see, is the dollar going to move 50 pips lower? I don't give a crap. What I care about is if it keeps the momentum going of these markets making all-time highs, that's so much easier, right? If I stay invested, it's so much easier. If gold goes higher, if silver goes higher, if Bitcoin goes higher, if China goes higher, if the dollar gets weaker and the stock markets, US markets go higher, that is way easier. I can make so much more money that way than expressing that through Forex. Now, that's just how I'm positioned right now because my Forex trading is just Swiss pairs and a couple of scalps here and there when I find a good setup. Where this week, I don't think I took a single Forex trade this week. Outside of just checking my P&L on Swiss pairs, I didn't take a single Forex trade this week. So I was looking, but I didn't take anything. The setups, I didn't see anything I liked. And so I'm sitting on the sidelines. But my robots are still doing their thing, and that's fine. They typically do, and I let those robots grind. But the dollar's sitting here right at support. The dollar yen's going back and forth, where now you're starting to see that the dollar yen is weak and weak. So it's dollar and yen both weak at the same time. What does that mean? It means this is a trade I probably don't want to touch. Now, I said when we had this, test of the lows that we're probably going to get a squeeze to the upside, and it's happening. So we came down to like 140. We're up to 145. That's a 500 pip move on the dollar yen. Now, granted, it flushed down and flushed down and flushed down and took out this low, and it pivoted off that low nicely. So is this a, falling wedge type situation? I could see that happening. I could see the dollar yen getting some strength back up towards 148 or 149 or 150. But from there, I would probably be shorting the dollar yen. I mean, if I look at this area, this level and this level and this level, I would be looking for turns on the dollar yen to be a seller. If this is the high and this whole change of yen weakness to yen raising rates to dollar getting weaker and the Fed cutting rates, to me, this is a, what could be a multi-year high is in. And so if we get a chance to see price turning and confirming, then these are some good areas to look for. And I'll shout out those prices here. But if I see a turn to the south at 149, I'm looking to sell it. If I see a turn at 152, I'm looking to sell it. 154, 155, looking to sell it, right? If you trade small enough, you can just set a stop loss up here, sell, 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 put a stop loss above, and look to see if it just goes down and retest the lows. That's not a bad trade. But what's the risk on that trade? I mean, it's going to be thousands of pips of risk, so you got to trade super, super small. And some traders do and some traders don't, All right. But that's my thoughts on the dollar yen. I'm going to put in a couple of levels here. I like this area to sell. I like this area to sell. And I like this area up here to sell. Those are my three levels looking for sell trades. So if I put in a short position, I mean, you can do that and go after a high probability. I mean, realistically, you can do this. If you sell a turn, you can have a pretty tight stop in here, right? If you look for confirmation where price just, does its thing, comes up here and then starts to turn south, you get that confirmation stop loss above and then go back down to retest the low, you can turn this into an asymmetry trade where you have more reward than risk, which I do like the trade. But I guess I don't love holding a negative swap right now. And I think truthfully, if we see more flows coming out of China and Asia, something tells me that the Japanese yen is probably going to get a little bit weaker and maybe more so than the dollar. So if I go to the Nikkei for a moment, where's my Nikkei at? Right here. Look at this thing. I'm telling you, be careful of the Japanese yen, because this right here could be a cup and handle. If we have this flush and we rip all the way back up here, if this thing breaks above the high, man, this could be a cup and handle, which if it breaks, look at, this is no joke. If we go from this low to this high right there, and this becomes a measured move, the Nikkei could be hitting all-time highs. That's what I measure. That's symmetry, and then the real measure move of a cup and handle is actually up here. So it's not there yet, but that is a potential move to symmetry. And that would be area 1 for profit. And then if we have the break of this cup line, that would be area 2 for profit, all the way up to 46.8. Wow. That's a lot of potential. And that's also growth potential that's non-US. Okay. What scalps are you asking for? What type of scalps are you talking about? Are you talking about some of the trades I've taken? Let me see. So for Forex, some of them are like little swing scalps. So if I go to Forex, had a winner on the pound Aussie, winner on the Aussie Swiss. I've got a dollar cost averaging pending on the dollar Singapore that's way, way down there. Aussie Swiss, that one hit profit. That should have been a reply down here. Yep, hit profit there. So that was profitable. Took a small loss on the dollar Swiss, but I'm still maintaining a core position long in that one. And then pound Aussie, that was profit. Euro CAD, that was profit. Aussie New Zealand, that was profit. And then dollar yen, I got stopped out with a small loss. New Zealand dollar got stopped out with a small loss. That was with the dollar getting really noisy. So, and part of it was, stopped out on the dollar, stopped on the dollar. I just stopped looking at the dollar. I'm like, fudge it. I'll trade other currency pairs and not worry about the dollar. Because if you look at the chart on the DXY, it is a freaking mess right now. I mean, it looks like price should go lower. And we have this nice little swing, like high to low, and it's just choppy in here. And if it breaks lower, that could be just this beautiful little bear flag. But what if it's not? What if this is a fake out and this thing comes back up here to the highs again and this just stays choppy? I don't know. So I'm not trying to force trades on the dollar for dollar to be at the lows. I don't want to sell the lows. And if we take a look at dollar crosses, let's look at these dollar crosses. Aussie dollar looks like it has a lot of potential to be going higher. Okay. Where could this Aussie dollar go? Well, we've broken out, or I mean, looks to be breaking out, and I'm still not entirely convinced based on that dollar index. But if we have something like this, there's a ray. Let me see if I'll do a trend line instead. So we have that horizontal level, but if I connect these dots right here, something like that, I mean, look at where this thing turned. So what do we have? We have 3 choppy days of green, red, green. But if this actually holds, Aussie dollar, if you buy it, stop loss below, and there's upside here. And if there's open space, it's going to go. But that dollar index is sitting just like this, and it can't quite make up its mind. And so if the dollar index goes back up here, then this trade reverses back down. So, like I said, I'm just not in love with the dollar for trading Forex right now because it's still based on the dollar index, which is messy and noisy. But I like the Aussie dollar. I mean, look at this currency pair. We've had the low since 2022, higher low, higher low. I really did like this setup right in here where we have something like there's my higher low, this is kind of my lower high. If we're breaking out of this as a wedge trade, measure this move. There's up, there's down, there's up. Try to get back to this high. It does look like there's some open space. But like I said, I'm probably going to make more money by not trying to scalp dollar crosses and just sticking with my, longer term trades or non-US swings. And then for indexes and stocks and futures and everything else, just trading to see like a weaker dollar benefits so many different asset classes. And I hope we get it. I hope we have a weaker dollar because that is a ton of profit potential elsewhere. Okay. All right. I'll post those before we're done, Ellen. I'll post a Telegram and a Discord for you. Yep. So you're all welcome to join if you want to. All right. Other dollar crosses. Euro dollar. I mean, look at how messy this euro dollar's been. It's up, it's down, it's up, it's down, it's red, it's green. Every single day is a different color. No thanks. Pound dollar. Okay. Same type of thing. Lots of chop. It's making higher highs and higher lows, but I'm not that interested. New Zealand dollar to me looks better. Flows from China look better on New Zealand dollar to get stronger and the Aussie dollar to get stronger. I do like this trade where if it was here, stop loss below and look for open space. It's really just trading like right now you're looking at China is getting stronger. Okay, because they're adding, I mean, they cut rates, they're flooding the market, money supply is growing. If that added liquidity starts fueling non-US growth or global economy growth, I mean, there's all sorts of ways that this is not a bad thing. But New Zealand and Aussie, just due to proximity and they're great trading partners with China, it benefits. It can benefit a lot from good order flows in China. So anyway, this one, same type of thing. If this is a swing, we have really strong support down here. I look to see if the New Zealand dollar can get back up to that level. And honestly, if this is a swing to swing, then looking at symmetry around 7,000 or so. And I want to see if I can just buy and stay with this for a push. But that's if the dollar index finally makes that move. Okay, dollar CAD is pretty much garbage. It was actually a really nice sell trade up here at the highs. And, I was selling this around 38, 38.50. It came all the way back down to my profit target at 36. I started to buy it down here and leveled in. You can see those blue arrows. I leveled in for like 100 to 150 pip win, and it's back down to those lows. All I want to trade right now in the dollar CAD is this. If the dollar CAD is back to this support level, I will look to buy. If the dollar CAD is up to this resistance level, then I will sell. In the middle, I'm not that interested. The only reason that I bought it down here is because all of my oversold indicators on the daily, the 8-hour, the 4-hour, the weekly were all showing like oversold conditions. And so I took a stab at it. Plus we had a pocket, plus we had pivots, plus we had all sorts of stuff. It just seemed like a high probability setup. So I did. So that worked out pretty well. But Now I just want to buy it low and I want to sell it high. And I'm going to wait for price to come down here. If price comes down to 132, I will start scaling into the dollar CAD and looking to see if this one wants to go back up. I hope it does. I really hope it does. Because from 132 to 130, I think this trade looks awesome to get back to like 139 or 140. That would be another invest worthy trade in my opinion and stay in this multi-year range. So I hope the dollar CAD does exactly that. And if we get there to I'm going to put 132.50 and I will invest in the dollar CAD. I'll buy low and I'll scale in and I'll take this back up to the midpoint or all the way back up to the range highs. Okay. All right. Ellen says, not familiar with Discord. Yeah, Discord it's pretty popular these days. I try to keep my Discord channel very clean. It's not super ridiculous. I don't have a bunch of forums and threads and subthreads. If you want to find me every day, here's my free group chat. Okay, there's my free group chat. This is gamma bars are with dynamic trends software. So if free group chat where I post every day, Forex, stocks, options, futures. Anytime I go live on YouTube, my blog, analysis, do a lot of private one-on-one teaching or instruction, any discounts and codes that I have in the industry, referrals, whatever. If I help you get a better broker, help you get some software, some of the education that I offer, all that's in here under affiliates and discounts, real-time news, and then scammers and success. There you go. David, leaving me a testimony. I love it, man. Thanks to 2 bonus trades this week. I was in and out, made over 100% in each. That is freaking sweet. Shout out to David. Good stuff, man. Thanks for posting that. So yeah, like I said, before I go today, I will post a Discord link if you want to join me, as well as a Telegram. So I have free Telegram channel that I'm posting on every single day, so it's pretty active. And same thing on Discord. All right. Okay, dollar CAD, I do like that trade if it comes down to the levels that I want. Dollar Swiss, I'm still long, but look at how choppy this crap is. I mean, this is also back and forth. I would expect there to be some manipulation at the lows, based on this support. I mean, I could see price like dropping lower and then manipulating up here and then, starting to actually change the course and getting a trend line break. But that to me is about the Swiss National Bank. With them cutting rates, that's a good thing. I hope they continue to want to cut rates. We know the Fed's going to cut rates, right? So, I mean, maybe the dollar is chop suey right now, but man, it would be nice to see that at, I don't know, let's say 13-year lows. This flash crash low is 2011. We haven't been this low since 2011. I mean, I'm not saying that we can't go down to 8,000 or 7,500 or 7,000. If I sit on trades that long, I will. I don't care. But I'm going to invest at 30-year lows, and I'm going to make a shit ton of money on the dollar Swiss eventually. But I also might make money faster on other Swiss pairs. It might be Aussie Swiss first or New Zealand Swiss. So I'll see how those play out. But I still like the dollar Swiss. The dollar yen, like I said, if I'm looking at dollar yen, I don't mind looking at sell trades up here, because I think what we're doing is on the yen crosses, we are potentially putting in a multi-year top. But it is the yen, and you got to be careful. Like, the yen stuff can just drive you crazy. You can think you have the perfect trade, and the yen just does its own thing. It beats to its own drum. It drives me crazy. So I would be very careful of, if price comes up here, I would look for confirmation to sell rather than just selling it. If price comes up here and fills, I mean, honestly, if you're looking at anything short term on the yen pairs, let's go to like a 1 hour chart. Okay, let's look at a 1 hour chart. Let me put on some really basic moving averages. Have we turned up into a buy zone yet? Yes or no? So this is a 50, a 100. Let me turn this one off and then this one on. There we go. So if I just have the 50, the 100, and the 200, just basic moving averages, are we in a buy zone right now? Yes or no? On the 1 hour time frame, we are. And if this is my first pullback level, I could totally see the dollar yen coming down here, finding support, going back up, coming down here, finding support, going back up, and still going like this until it rips up into this level. There's a pocket here. There's all sorts of structure back here. So I could see us getting to 149 or 150 before we look for that first big turn. So as long as price doesn't get super messy, I could see the dollar yen doing something like that. Because also we are breaking that trend line right there, right? If you look at this high and this high, you connect the dots, we're breaking out of that. So if that stays with higher highs and higher lows, to me, this is the bigger pullback zone around 150. So just saying. I mean, if I'm buying right now, I'm not going to fight what I see. What I see is uptrend, at least in the near term, until it hits those bigger levels to sell. And then I'd line it up for a much bigger swing trade. All right. Anything else for today? I think what I'll do, if you have any questions, have some charts, you can go and post in the chat. Do me a favor if you're watching this thing live or watching this recording. It does go a long way. I hate having to ask for this every time, but you know how the YouTube stuff works. If you like the content, hit the thumbs up button. That makes a huge difference. If you leave a comment or just say, thanks, that makes a huge difference. That helps, my channel get seen out there on the old, millions and millions of channels that are out there, and my little 7,600 subscriber channel, it helps more people find it if the stuff is good. Okay, so on that note, what car do you drive? I drive a little SUV, a little SUV that totes my golf clubs and my dog. I did have a car. I had like a little 4-door sedan out here, but the winters were so nasty. I had to get something a little bit better for traction and driving through these mountains out here. So, thanks, Min. First time here. Nice place to be. Good. Glad you like it. And come back for more. These sessions are live every day, unless I say otherwise. Like, look, I don't mind being here, opening bell, closing bell. I'm pretty much doing it all day, every day. I did have somebody reach out and say, hey, you want to play in this next week? And it's a golf outing. So I might take a day off, maybe, but usually I don't. I like trading, and I like doing my thing. So, all right, let me do this. Let me post the Discord. So if I want to invite everybody to Discord, here it comes in the chat. So this is Discord channel, and then my Telegram channel is right here. So copy, and then my Discord channel, Telegram channel. There you go. So Telegram, Discord, you get it, you got it. Easy to follow on your phone, real time, whatever. And just a good way to stay in touch. And I will say this as a disclaimer, if you're in my Discord channel, okay, and the same thing is true for Telegram. I don't hear of it as much in Telegram, but in my Telegram channel, this is where I am. Okay. So when I post all my messages right here in my channel. Anything that I have for courses or certain member channels, I post all that stuff myself. In Discord, I post it all myself. So if you're in my Discord channel, I will say this. I say this every time, and the reason why is because a lot of people join it right now. But look at this message. Okay, I type this quite a bit when I get these big influxes of new members. Okay, I like seeing new people join. This is organic. This is real, real growth. I'm not looking to hey, I'm going to buy some ads and I'm going to try to get all this crap to get fake people into my Discord. I want real people on my Discord. The issue with Discord is this is a public format for me, and I don't send friend requests and I don't send private messages. So if you join my Discord in the next hour, you see a message pop up that says friend request from Real Chris Pulver, ... Real Chris Pulver, Real Chris Pulver, 2 R's, L's. It's not me. Okay. Nobody can take my profile. My profile is Real Chris Pulver, and my name below that is Real Chris Pulver. This is my only account. This is where I'm at. You want to find me every single day. It is right here in this free group chat and everything I've created in the public forum. So I don't hide anything here. Okay. So please help me flag and kick and ban and report any suspicious activity, because I don't want anybody thinking that they're talking to me when they're not. And I don't want anybody, I mean, that's the annoying thing about this stuff is it happens on Facebook. It happens on Discord. I get it. So again, if you want to know where to find me, this is the best place to find me, and know that this is where I'm at. So everything that's here in the open that I can publicly post, that's where I'm at. Okay. Just to let you know. When I went to YouTube today, it wanted me to sign into the chat. What is it? It shouldn't cost you anything to do that, Carla. If you go to, hang on, I'm going to go to YouTube right now. youtube.com/Chris Pulver. We're live. This it's open. Shouldn't cost anything. So anyway, that's it. So I'm watching myself in my own reflection. Isn't that like a Greek mythology or Greek tragedy? Adonis? Is that what's going on here? All right, anyway. Look, I just heard closing bell. Let's check and take a look at everything. So P&L for the day, not a bad day, up around $21,000. A lot of it is coming from China. Super pumped about that. My gold trade, silver trades doing really well. I'm not joking. Like one of the guys I work with that's in Florida. Uh, we were talking about just overall performance this year, and I'm like, look, dude, I mean, performance is pretty solid. We haven't taken a lot of risk. We've had a really tight, steady, 2-3% here and there every single month. And I'm like, China has done nothing yet. Silver has done nothing yet. Gold has done nothing yet. Bitcoin is just starting to get better. So this week it looks like getting some bigger boosts, and that's a lot of fun. And hopefully there's plenty more to go. So if we can get some additional momentum, awesome. If the market's starting to peak out for the U.S. and starting to rotate elsewhere, it makes sense. I do think we're due for some volatility in the U.S. I don't think we're necessarily changing structure here. Look, I'll say this. For the U.S. markets right now, the bears would have to take out this Labor Day sell-off low to look even remotely scary, or they would have to break this trend line. If this doesn't happen, this market is going to keep grinding and grinding and grinding and grinding, and it might not even grind. This market might just do this. It goes up, it pauses, it pulls back, and it goes back up again, and it pauses and pulls back, and it goes up again. It might be more highs, higher lows. So there's a lot of structure that can develop here, but there's nothing about this that tells me this market is tanking. So am I cautious? A little bit. Am I crazy bullish? No. But I'm letting the markets drift. We have money supply going up. We have China finally getting online. We got the US that's trying everything to keep the growth cycle going and the Fed cutting rates. It's about as accommodative as you can get. The only thing that's going to derail this right now would be like a terribly dramatic election or some type of geopolitical outlier that nobody's talking about right now. China wants to start pumping money in the economy and invade Taiwan at the same time. Now we're talking problems. Saudi Arabia wants to cut the $100 price target, go down to $50 or $40 a barrel. There's probably going to be a war somewhere. I don't know. So if that type of crap happens, that's geopolitical, that's out of our control, but that stuff is all out there in the peripheral that we got to be at least mindful of. But price wise, until this stuff breaks, right? Until prices clearly breaking lower, this market just wants to grind, right? And as I said earlier, if you saw those two charts when I came in, let me find that right here. Okay, look, the performance at all-time highs is ridiculously good. It's the worst feeling in the world to buy at all-time highs. But this year, I want to say that the S&P, let me see if I can count today. How many all-time highs has the S&P made in 2024? That says June 18th. Well, that's freaking not current. Let me see what ChatGPT says really quickly, and then I'll let you go. Oops. ChatGPT. How many all-time highs has the S&P 500 made in 2024? It should be like 40. I'm hoping it will tell me. As of September 2024, the S&P has reached 40 all-time highs this year. The performance is fueled by strong market rally. Yeah. I just wanted the number. So I'm pretty sure we're at 39 or 40. And that's pretty impressive. This is quite the stretch where this is probably ranking in maybe the top like 10, 15, 20% of all-time markets the last 70, 80, 90 years of having this many all-time highs in a single year. And we're also doing that with a fairly low amount of volatility. And so it just keeps grinding. So as long as we don't have some crazy outlier, this market rolls over on itself. Look, it's going to go up and it's going to pause or pull back. It's going to go up. It's going to pause, pull back. It might just blow these tops off. I mean, if I extend this out, look, let me extend right, extend. Okay, extend right. There. So I'm just going to keep this intact right now. If this is what the market wants to do, this is where I'd be watching. If it comes up to this level, we have resistance. We have resistance. I mean, that's getting into that 590 to 600 zone. I'm not saying I want to call the top there because this market could clearly just be fueled by additional momentum. But the more parabolic this looks, the more antsy I'm getting for this thing to then crash in a bigger way, you know? And we all know that's very possible. If this thing starts to look, this is healthy. Up and down and up and down and up and down and up and down and up and down, that's healthy. But if we go parabolic, where this thing just goes up and up and up and up and up with no pullbacks, this thing freaking snaps. And we don't see this market, go straight up without coming typically straight down. So just be mindful of that as we march through the next 3 to 6 months, because it's going to be something to watch, and just making sure we're not caught blindsided. That's all. Okay. All right. Let me change this here. All right. We're good on the trend line. Just want to make sure it didn't extend. So Daniel, that's my thoughts on the SPY. Went ahead and signed in the Google so I could chat. Hope this doesn't come back to haunt me. I mean, I don't know what I don't know. That's weird, Carl. I don't know what you had to sign in for. You should be able to jump onto YouTube and pop in. So that could just be like YouTube or Google saying, if you have an account, then sign in through your account. But this is about as easy and as free as I can make it. How is Docu looking short and long term? DocuSign, $62. Well, long term, it looks pretty promising. I just don't know if I can get another chance to buy it at $40, but let me look at something else here. Let's go to DOCU. Earnings are growing, forecast to grow, trading at, holy shnikes, that's not too bad. 1.9 price to sales, 35.7 price to earnings. Fair market value, another $30 higher. We're 26.5 undervalued. Let's see. I mean, looking at the technicals here, that's a good. Who picked that out? Who put that in there? Eric. Good call, man. So right in here, I would say that's a nice little neckline. And here's what I'd like to see. If we break this neckline, there's room to run. I would just do a simple measured move. So let's take symmetry right here. And that symmetry gets me up towards around about $74. Now, the break of this neckline, that's better for a stock move, because now we're talking about $90 to $91. That's probably the trade that I would be taking. If we break above this neckline around $62, then I think there's room to run towards like 90 to 95. Now, that falls in line with what I'm looking at here for $127. I mean, current price, is that right? That's Disney. What the hell? Hang on. Disney. I need to go Docu. There it is. A little bit different. Okay. This is different. Never mind. So technically, I still like the same thing. Trading below estimated value, became profitable, trading at a good value, earnings forecast to decline. Doesn't mean it's unprofitable. Okay. But says earnings are forecast to decline by an average of 45.2% per year for the next 3 years. Yikes. That's not good. Now, this means I can get a little bit more picky. So a price to earnings at 12.4, price to sales at 4.3, and fair value at 130. This is a huge upside potential. Okay. But look at the peer average. So, and I don't even know these, like Open Text, Bentley Systems, Manhattan Associates, Diners Race, whatever that means for that, earnings and price to earnings for peers. The average is 61.7 and DocuSign is 12.4. Look, I think there's good potential here, but there's two trades that I'd like to see. One is, and probably my least favorite, but that would be if I just do a breakout trade right there, and I look to say, okay, if we break above 62, I just get long the stock and I take it up towards 90. To me, that's a safe profit target because that's a measured move. Okay, I'm going to look at this level right here. We have lows at $40. And I want to see, if I could take some ownership here, could I own this at like $50 or $40? And that's going to be my question. Can I use options to own this at 50 or own this at 40 and then sit on DocuSign? Because if price doesn't break the high and it comes back here, that gives me a chance to, be positioned where I want to get positioned. But I wouldn't be surprised if we have a bit of a melt up on everything, that there's going to be some crazy amounts of like money and momentum going into undervalued stock that have chances to run. So this could be one of them. So I'll go ahead and measure. That is basically my head and shoulders measured move. So I'll go to text. This would be head and shoulders measured move. Okay, so that's my neckline, and there's my measure move. So if I can get something at 50 or 40, which may or may not be good, but it's after closing bell, so I'm just going to take a look at the options chain. So if I go to, let's go out a year. So on DocuSign for 50 bucks, I can get $1.55, and for $40, I don't have a bid. I could get this going. Let me try to take a trade here. If I went 55 by 40, this isn't too bad. This might be one. So I'll consider this trade tomorrow. Here's what it would be. If I take this trade, this is a ratio spread. And if I did the 55 by 52.50 and 50, and I put 2 contracts in for the 50, that is actually, never mind. That's not a ratio spread. That's a 1-1-2. Hang on. If I did a 1-1-1, I get $1 credit. And if I took any ownership here, I'll calculate my break even. So if I was assigned at 50, I get 98 cents for the credit on the trade, minus 250 on the bear put spread. I could own the shares of DocuSign at $46.52. Now that's not 40, it's not 50, but that's pretty darn good. If I owned it at 46.52, that discount would be from current price $46 and change. I own this thing at a 25% discount from current price. And that means price gets to come back to me instead of me trying to buy the highs. So that's one way I consider trading it. Now, the flip side of that trade is if I take this trade right here, if I trade this trade, I'm only going to get about $100 of income, which is not that exciting. So the other play that I could consider is if I get rid of this and I buy the 52 and I sell the 50 and I do 2 of those, now I could do this. I could own it at 50 and I could take out $1.69 and I could own the shares at 48.31. But if I get the trade where price just keeps going higher, if price goes higher, I can generate $1.69 of income without taking the assignment. It's going to tie up a little bit more capital. So I'm going to put DocuSign on my list tomorrow as a potential trade. It checks a lot of boxes. Like I said, I'm a little skeptical of the. It looks better than when I see this in this little snowflake analysis here. When I see that it says earnings are forecast to decline, that's a bit of a red flag, but that's a lot better than something like this. And I do have shares of SoFi, and it kind of sucks to read this, but it says has less than 1 year of cash runway. Or you look at something like Fudge, not Zoom. I'm trying to think. There's the same thing. Earnings have been forecasted to decline by an average of 1.4%. That's not a big deal. Fudge, what's a crazy? I guess what's Peloton? Peloton it's pretty garbage. This is perfect. Okay. This is what I hate seeing if I look at this analysis. Currently unprofitable and not forecast to become profitable for the next 3 years. That to me is a big no-no. So it doesn't say that for DocuSign, which is that's the only reason I'm considering it. Because everything else is like this is a lot of red flags, but when it says unprofitable, especially in tech, I am not interested in trading unprofitable tech. So anyway, I think DocuSign checks enough boxes. I'll probably end up looking at the trade. I'll just debate whether I want like the 98 cents or the 169. The idea is I want to try to own it as low as possible. And the other side of that is if I don't want to spend a bunch of money on it, but I think it's going to go up, then I just look at maybe doing a January or March call option. But here's where I'm going to pay a lot of money. If I go in the money for the call option, I'm basically paying for every bit of premium right now. If I did like an 80 delta, okay, and that gives me a break even of $66, I need price to move another $4 to make any money on the trade. So what I could do is I could buy the 50 and then I could sell this like 62 or 65, lower my cost basis. If it gets called away, I can make a couple bucks. So anyway, let me let that marinate for the night. I'll come back tomorrow morning. I'll kick this trade around. And if I like it, I will post it in my Discord with my A1 trading community service. It'd be right in here under stocks and options if I like to trade. And that is all part of a Pulver Alerts package that I have through A1 Trading. So you can check that out in my Discord as well. Carla, any more room for gold to run? I think yes. I think the hardest thing right now is trying to talk about gold, like when's it going to pull back? I've been saying that literally for the last month, and it hasn't pulled back at all. So is there room to run? Totally. Do I want to see a pullback? Absolutely. So if I do a 200, 100, 50, look at this. I mean, all I really want to see on gold is a healthy pullback to find even the most minor moving average at the 50. If we can pull back to a 50 moving average and then go back up, buy it, go. Right? There's so much good support here. I'm not saying we're overextended, but I just want to see a pullback. So right in here, and we're 239 bars extended on the daily time frame. I'd love a pullback. I just don't know if we're going to get one. So all I'm looking to do is if my gold trades melt up higher, so be it. I'll take the profit. I'll let it run. If this starts to get parabolic, then I'm going to get more and more protective of potential top and a crash. But I'd love to see just a little pullback, find the 50, and then go higher. Just give us something, man. Like right here was perfect. So we ripped up here, we paused, price catches up to the EMA, and then boom, off we go. So just some basic dynamic support would be great. But there's room to run because there's a lot of global interest in just pumping money into gold and silver. And both of those, by the way, are trading like we have some macroeconomic event on the horizon. Like you don't see the broader indexes beat by gold ever. When the S&P is up, 17, 18, 19, 20% for the year and gold's up 26 to 30%, you don't see that happen very often without something, definitely breaking or close to breaking in the background. So, I mean, I don't mind it. I've been long silver and gold all year, and so far so good. But man, we got to hope that things have to stay somewhat like stable and normal. But who knows? This market is doing whatever it wants. So, buckle up and go along for the ride. All right, buddy, I'll let you go. Thanks for being with me today. Have a good rest of the